Hello and welcome to today's video on high altitude investing. My name is Dallin Anderson and today I'm going to be talking about the hidden tax the government has on every single person. We're going to be going over macro trends, talking about how inflation is affecting the economy right now, and kind of going over my thoughts about how this will affect the price of Bitcoin, how this will affect the price of the S&P 500, and kind of what to do for yourself so that you are not getting hurt by this hidden tax. Make sure that you guys hit that like button right now, as well as the subscribe button, because I am dedicated to uploading 5 videos a week all through 2020 to keep you guys posted in the markets. With that being said, I am doing a giveaway on my Twitter right now for $50 worth of Bitcoin. So make sure that you go follow me on Twitter. You have to be subscribed to my YouTube and following me on Twitter. And then you can just drop your Bitcoin address in the box below here in the comment section, and I will go ahead and find you, and I'm going to pick a random winner by the end of today and send you guys $50. So make sure that you guys are following me on Twitter and YouTube. Okay, so without further ado, let's get straight into the analysis. Okay, so we will get straight into the analysis with gold here. This is the gold chart on macrotrends.net, and this is just showing all of the recessions. Now I'm going to go ahead and remove the recessions, and we'll go ahead and just look at the normal chart as far as the price and graph goes. As you can see, this is a very, very large uptrend that has been going on for a long time now. And that is pretty obvious because it's gold, right? And gold has shown to continually increase in value over the long term. And I think that's why gold is used so heavily as a long-term investment and as a hedge against stocks, is because it's so old and has proven to be a good long-term investment. Now, the interesting thing about gold is if you click on the inflation adjusted, and this is why we have a hidden tax on the people that nobody even realizes, because of the amount of inflation that we experience on a regular basis. So this right here is gold adjusted for inflation. And as you can see, we have not even reached our previous all-time high. We're actually still below the all-time high from the 80s. So if you're counting for inflation, gold is actually worth less than it was in the 80s. And that's really, really interesting to me, because everybody thinks that they are investing in these things when really what you're doing is hedging against the loss of the dollar. Yes, this is in an uptrend, so you will get an investment in the sense of a return on what you put in. And it is going up versus the dollar, even adjusted for inflation. But with that being said, it's still a hedge in the sense that you're trying to avoid inflation by investing in it. And I think that's the big thing that most people don't understand when they get into investing, when they get into the stock market. They just get into this because they want more cash. And for me, it's always good to build and accumulate more cash, because that's how you can invest in more things. But overall, you're looking as a way to hedge against inflation and hedge against that cash. And it's just so interesting to me that nobody is aware of this hidden tax. There's a lot of people that do know about it, but they don't even realize just to the degree that it affects everybody. So I'm going to go ahead and show you another chart here, and this is going to be the stock market versus gold. So you can see here that the stock market versus gold is a very interesting chart, because the stock market definitely does better percentage. Meaning that if you're putting into the S&P 500, you're actually getting a higher return on investment than gold. But is gold a safer investment than the S&P 500? Well, it really depends on your risk profile. But as you can see, during the recession in 2008, gold did see a little bit of a dip when everything was panicking, but it was the first to recover and honestly broke its all-time high faster than the stock market did. So it did a little bit better post-recession than the stock market did. Now, After we recovered and we broke the all-time high, then gold went ahead and started to go down a little bit as the stock market rallied very heavily. So we do see times where it's correlated and cross-correlated. That's very important because gold can work as an effective hedge against failing stock markets, but you have to understand when to do it because it's not always going to work for you. So I think that this hidden tax on the people is why it's so good to be hedging your funds in stuff like Bitcoin, in stuff like cryptocurrencies, and in things like stocks. I think that stocks, gold, all of these things are useful and they can be extremely valuable as a hedge against the failing and the loss of value inside of the dollar. Now, what's really interesting to me, and I talked about this in a recent video, is that while all this stuff is happening, while the dollar is being hyperinflated, being printed like crazy, actually the value of the dollar is increasing, meaning that other fiat currencies are losing value versus the dollar. So this shows me that people are panic selling into cash. They're panic selling their stocks, they're panic selling their crypto, they're panic selling their hedges, their gold, everything into cash. And the reason that they're panic selling is because they think that this is the top of the cycle or that they need to get out so that they can buy cheaper. And that is usually what we like to call capitulation. When people start selling and talking about buying 50 to 80% lower, that usually just means they sold at the point of maximum pain in the market. And they actually are going to regret it later because the market then recovers and continues to see upside. So I think the dollar is showing strength because the fact that people are panic selling and the fact that the dollar is still the strongest economic structure on the planet for many reasons. Now, China and some other countries are very close and catching up, but I still personally believe that the dollar is the strongest economic currency, and the reason for that is because it has the most strength against the other fiats. So therefore, it's gaining the most value against the other fiats. So I believe that cash is useful, but I do not believe that you should be panic selling into cash. It is a tool that you need to deploy to create more investments and create more hedges against cash because it's a guaranteed to fail system. Inflation will fail. Fractional reserve banking, that is something that I really, really want the world to be more aware of because I don't think that the average person even knows what fractional reserve banking is. But you guys, fractional reserve banking essentially means that if you deposit into the bank, they only need to reserve a fraction of what you deposited inside of the bank as holdings. So that means that if you deposit $100 into the bank, they can go ahead and take 90% of that and loan it out to other people. And then those people can go take that money, deposit it into the bank, and then the bank can then take that 90% and loan it out to more people. So it's just this infinite cycle. And this is even, this affects inflation, but this is even different. This is another hidden tax on the people. And it's just continually creating money out of thin air. And that's what fractional reserve banking is. And that's the hidden tax, the inflation and fractional reserve banking. And that's how they continually scare people out of the markets, get them to panic sell into the dollar, and then let the markets recover, see huge upside, and they make profit off of all of your fear. So do not be the person that is getting taxed, that is getting their stock, that is getting their Bitcoin stolen from them because of the banking system, because of the fractional reserve banking system. Okay, so I'm going to go ahead and pull up one more website. This is a very, very interesting but scary site that shows you how much a dollar would be worth back in 1913 when the Federal Reserve was first created. This is inflation calculator. So this shows you how much $1,000 would be worth in 1913. So what this really means is if you take $1,000 and you talk about what $1,000 was worth in 1913 versus $1,000 in 2020, you can see that $1,000 actually equals $26,000 in 2020. Now people are like, oh wow, that's so amazing. That means that my money, I have $26,000 in 2020 if I have $1,000. No, you've got it completely backwards. In fact, that really means that $1,000 used to be worth $26,000. But now, because of inflation, it's not. And the reason I put $1,000 in is because that's how much money I started out with when I first got into crypto. And $1,000 did not seem like that much money to me. But when you think about it and you think it in terms of $26,000, that's how much it was worth in 1913. And so that's such a big hidden tax on the people. And yes, this is over 100 years ago, but it really doesn't take that much time to be affected by inflation. And over the long haul, if you're putting all your cash in the bank and then you die and you expect your kids to be able to spend that cash, but it's worth significantly less than it was worth before, you're not properly investing and you're barely even leaving anything for them in the first place. So that's fractional reserve banking. That's inflation. That's the hidden tax on the people. That's why I'm so bullish on Bitcoin in the long term. Short-term price action for me is pretty meaningless, but you guys, I'm super bullish on Bitcoin in the long term. I also think that is one of the things that will fuel this parabolic run up in the stock market is hyperinflation, fractional reserve banking. You guys, it looks like the stock market is really high, but when you look at macrotrends.net and then we calculate the stock market versus inflation, which I'm pulling up here in 2 seconds, you'll actually see pretty quickly that the US stock market isn't as parabolic as you think it is. It looks so parabolic because of the fact that it's valued against the dollar, and therefore you have to realize that inflation is so large, it's going to make everything look parabolic. By the way, including Bitcoin. Bitcoin is also paired against the dollar. We value Bitcoin versus the dollar. So when you look at Bitcoin, you're like, whoa, Bitcoin is so parabolic. Kind of, but also the dollar is hyperinflated like crazy. So this is without inflation being adjusted, and this is with inflation being adjusted. Yes, it's still on an uptrend, but you can see that its trend is much, much less parabolic and more reasonable, and also a lot more volatile. You can see it's just up and down and up and back down. It's a lot more volatile and less of a steady growth curve than when you no longer adjust it for inflation. So that's what I want to talk about in today's video. You know, that's the hidden tax on the people. Tell your friends, get them in on Bitcoin. Make sure that you guys are following me on Twitter and YouTube and commenting your Bitcoin address below so I can pick a winner at the end of today. I appreciate and love every single one of you, all the subscribers and support. Super awesome lately. And I will see you in tomorrow's videos. As always, stay profitable out there.